All right, everything looking good on my end. I'm gonna go ahead and start just a couple minutes early here. Should be coming through. You should be able to hear me loud and clear. And we are live. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 11/28/2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay, so obviously posted up the Wyckoff Type 1 distribution schematic, events and phases. And we have been talking about the weekly bearish divergence that has been building for some time now, and how we eventually expected it to play out. But weekly divergence can take quite some time before it actually develops and then finally peaks and shows itself. But we will get into that shortly here. So before we take a look at the stocks, and probably going to touch on crypto as well, let's take a look at the 10-year Treasury yield and see what that's doing today. So obviously that had pumped back up and retested that high. And then we got the breakdown back to retest the 200 simple moving average. As far as I'm concerned, we are range bound between 1.689 and 1.43 until we break in one direction or the other. Nothing really changes for me. So I am overall still bullish, as we are still on top of the 200 exponential and simple moving averages. We still have momentum in our favor for now, but we are seeing a slight rejection off of the TJD TDMACD. We have also lost the bullish control zone and are rolling down on the stochastics. So while this looks better on longer time frames, the daily is not looking particularly great. So we'll take a look at the weekly. We basically are just getting rejected once again at the 200 exponential moving average. Eventually we're going to break in one direction or the other. I suspect it will be back to like the 1.839 area, but it is possible we get rejected off 200 exponential and sweep the lows. The key area to pay attention to if we lose this level is 1.21. We're seeing that same signature here on the TJD TDMACD, where we basically have come down below the 200 or the slope line, come all the way back up, and then failed to get back above it. And now the slope line is flipping over to red. So this may be at least the end of the temporary trend, and that's essentially a rejection before we go lower. So we'll have to see. Obviously, there's the new variant, and we're scared of this. We're worried about that. Oh, more lockdowns. It's all whatever. I mean, I'm not a doctor. I can't tell you should you be scared or not. But everything I've seen so far just says it's like higher transmission rate. So, I mean, at this point in time, you've either got the big V, the vax, you have already gotten it, one of the other strains, and, I don't know. I mean, it's up to you. You really got to, evaluate your own decisions, your own choices, and at some point in time, decide what's more important, freedom or safety. Because, essentially, you wouldn't quit driving a car because you're afraid that you're going to die in a car accident if it's like 1 in 1,000 or 1 in 10,000 chance that you die. You wouldn't stop, going outside if you're afraid of getting struck by lightning, you know. So eventually you got to do risk reward. So for me personally, obviously my trading style utilizes like risk reward and, all that good stuff. So the way I look at it is, if you're not at risk, what is the reward going to be for you? What is the potential risk you're taking? And then what are you going to give up, to avoid that potential risk? And in my opinion, freedom for us and all future generations is much more valuable than, no offense, I don't mean to downplay it or whatever, but a bunch of people that are 80 years, or over. And I say that specifically because those are the at-risk people. So, but anyway, I'm not even trying to get into all that. But that is the reason that the markets got spooked. That's the reason we're seeing the TLT jump back up here. If we look at the TLT on the weekly, we're seeing just the same thing again. Hard buy signal, momentum in our favor. It looks like basically on the weekly, the 20-year Treasury wants to go higher. Now, this is not the yields. This is the bond prices. So, this is obviously trading inverse to the 10-year yield, but we're seeing a little bit of difference because of the time frame. But essentially, the more time we knock our head, on this resistance right here, the more likely we are to burst to the upside. So again, paying attention to what happens this week, as this is a crucial week because we basically closed at that resistance. And just like we say, the more times you bump your head on resistance, or the more times you hit the floor on support, the more likely you are to break through it. And we're seeing both the yield and the actual bonds themselves hitting key resistances. So it's just a matter of which one is going to break through. And the market's got to tell us. We can't tell the market. So obviously the U.S. oil, trade played out perfectly. Prediction, price call, target, whatever you want to call it. We had our 3 drives of bearish divergence, 1, 2, 3. Spoke about them in advance and how we expected an aggressive sell-off back to our key zone. We specifically called out the 382 test at first, the retest of the moving averages, and then expected a breakdown back to the 618. We overshot that breakdown slightly, but basically hit the 200 exponential and simple. We also hit basically the breakout of our initial resistance line that now we would expect to act as support. So as far as I'm concerned now, we've had an aggressive move down in oil. It was preluded. The market told us ahead of time this was going to happen. How did it tell us? How did we know? Well, we spoke about it specifically in the video. We have 1 drive up here. We put in then a higher high right here, and then we put in a 3rd higher high right here. And then if we look at our indicator oscillators, we will notice that we put in a high back here, we put in a lower high here, and then we put in the same or slightly lower high here a 3rd time. And then again, if we just look at the TJD TDMACD, okay, apparently we didn't. But yeah, so we had triple bearish divergence between this point, and this point. And then that tells us essentially we're expecting a sell-off. It does not mean the trend has to change. I'm still bullish on oil in the long term. I'm not going to Kathy Wood it and say now like oil's going to $12. We still need oil. We still use oil. And if you look back at any energy source that we've ever had through all of time, when we come up with a new energy source, or when we evolve or create something with technology, we don't just get rid of the old energy sources. We just put on that extra energy on top of what we already had. So oil still looking the same to me, still looking good. We got the move down. So at this point in time, I'm basically looking for, sorry, hang on one sec. Get this chart in check here. So I'm basically just looking for, the retest, which we're currently getting. So the key retest we're paying attention to is this orange line right here. We obviously got our 3 drives of bearish divergence. Again, if we look now on the weekly, we see that they were not only evident on the daily, but they were evident 1, 2, 3 drives on the weekly, 1, 2, 3 drives on the weekly on price action. And then if we look at the TJD TDMACD, we see 1, 2, 3 drives on the weekly. So if we look at the weekly, we had 3 drives on both the TJD TDMACD and the Jewel Thief, both free, available down in the comments. You can go get those if you're not using them already. And then obviously on price action, we had 3 drives of bearish divergence. So we put in a high, a higher high, a higher high, a high, a lower high, a lower high, high, lower high, lower high. And then we saw the same divergence on the daily between price action and the Jewel Thief as well. We did not see it on the TJD TDMACD. But obviously, bearish divergence on the weekly is more powerful than it is on the daily. So we now have broken back down. Essentially this was looking like an Adam and Eve double bottom. We broke back down inside the neckline range, back here to retest support. That support being our 618 here in orange, which that's fine. That's actually what we were expecting to happen. So, we specifically talked about that. We could even come down lower all the way back down here and retest this red descending trend line resistance and expect that to act as support. That would be possible as well. What we're paying attention to now, though, is do we consolidate in this area and then continue to move up and then get our measure move, which would take us up over, initial target, $95, then 100, then like 120, and then probably new all-time highs? Or do we just get rejected right here and put in a 3rd in a series of lower highs? So we have a high back here in 2009. We then have a series of lower highs in 2013, and then we could potentially put in lower highs again in 2021. And then again, that's just going to be continuation of the bearish downtrend. But as far as I'm concerned, it looks more like we have put in a high here, a series of lower highs here, a series of lower highs here, and now we have confirmed that breakout. So we would expect that continuation to the upside. So once again, we see how the triple bearish divergence has played out perfectly and given us key signs on the weekly. Now here we see also on the TJD TDMACD, we have lost the slope line. It is now officially rolling over red. So that is telling us we're probably going into a long to midterm like consolidation or like downtrend. So we see the last time that happened, we sold off violently and we sold off for a long time, put in a lower high and then went way down to a new low. We flipped over the slope again right here. And then when we broke down, we came down and put in our all-time low. So we see, we talked about this in this previous video. I don't want to just reiterate the same points too much, but we saw about a 40+% drawdown. So are we going to get a 40+% drawdown now? No, we don't have to. Is it possible though? It's very possible. So is it possible we come all the way back down to like the 0.5 down here? It is 100% a possibility. So we got to let the market tell us what's going to happen. Do I think that's going to happen? I think it's very unlikely that we sell off that violently, as not that much has changed. But who knows? Maybe we go back into the lockdowns. Maybe the whole world shuts down again. We get scared. We all sit home like little bitches. The government tells us what to do. No one can leave. No one can drive. It's too scary outside. Oh my God. And then, maybe oil crashes again. It's definitely a possibility. If you live in an authoritarian world, expect authoritarian things to happen. So, again, do I think that's going to happen? No, but it depends where you live at. Ask somebody in Austria, if they think that's going to happen. They might have a different opinion than me. I'm obviously located in the United States. So, but that's oil. That's the bearish divergence playing out. And, at this point in time, we have to let the market tell us what's going to happen here. We're at key support levels, so I would expect at least to push back up. And then we have to see, can we break back above those levels? Can we take out that high and see continuation? Or do we get rejected and do we see lower lows? If we do see lower lows, I think $60 is our target. So now let's take a look at the traditional markets. Again, we know why they sold off. Obviously light volume on a half day. We left a gap behind. So, what did we do? We came down exactly to our target area. Could we see a little further continuation down to 200 exponential and simple and the red resistance flip support? We definitely could. That would put us around like 35,293 roughly on the Dow. But we already hit the, top of our buy zone. And we also hit the previous levels of resistance that had acted as support, failed to act as support. We put in a W double bottom and then broke out to a new high. And now here we are retesting the breakout level. So if this holds, I would expect this to continue higher. If it breaks down, we're basically at the support levels. We do also have a very key support level back down around like 31,500. Do I think we get down there? Again, it's too early to tell. I think it's unlikely, but we see one breakdown here. One breakdown here, we form that yellow trend line, and that yellow trend line intersects here perfectly with our long-term resistance here in purple. So the fact that I drew the box right here specifically, maybe we do get a super aggressive sell-off and tag that double support area. But again, I think it's very unlikely that we just break down from here. It would have to have some crazy catalyst and people get scared, etc. But now let's look at the long-term weekly. And once again, let's pay attention to the divergence that we've been looking at and see what has that been telling us. So here specifically we spoke about this high was put in right here at that key resistance level. We then came up and put in a second high here, which is higher on price action, but lower on our indicator oscillator. And then we put in a third high here. So we have 1, 2, 3 highs. We have 1, 2, 3 lower highs. So again, we have triple bearish divergence on the Dow Jones Industrial Average. We look at the same thing on the Jewel Thief. Once again, 1, 2, 3 highs, each lower than the previous. So again, triple bearish divergence. So we're just seeing that play out. The market has been telling us this was going to happen. We were waiting for this to roll over and potentially take out the previous week's candle. Once we did that, we expect continuation to the downside. So if we expect triple weekly bearish divergence to play out now, we would expect this to have continuation and a fairly aggressive move. So, that's what we're paying attention to. Once again, the markets have been telling us ahead of time that we should expect this move to take place, and that's exactly what's happening. So, but again, when we come down to these key support levels, it's going to stair step. Even if it's going to continue to the downside, it's going to stair step to the downside. So we'll get a sell-off, a rebound, a lower high, a sell-off, a rebound, a lower high, and kind of stair step our way down. Could we just get a big, juicy, aggressive red candle down to support? Sure, anything is possible. It's less likely, though, especially because we have carved out so much price action, in this area. So we've basically been operating, if we were to come back down just to the orange support right here, that goes back to April of 2021. So we've spent literally months and months and months just grinding through this area. So it's less likely we would just get a big aggressive sell-off. But who knows? If we have a liquidity crisis or something like that, it's 100% a possibility. So, but again, the markets have been telling us this was going to happen. It was just a matter of knowing, it's going to happen, but when is it going to happen? So now here on the SPY, we can look at the same thing on the daily. We obviously had rolled over here, put in essentially a topping pattern, hard sell, tried to come back up, could not make it back inside the bullish control zone, retested that key support line. It was acting as we broke above it, couldn't hold it. It was acting as support / resistance, kind of just indecision, and then we broke down from it. Now, we did leave a gap behind, so maybe we come back up, fill the gap before we see continuation. But at this point in time, the momentum and everything looks like it is to the downside. We could find support on the slope line right here. It's definitely a possibility. But again, let's just flip over to our weekly and see what the SPY was telling us. So again, we have, in this case, a high back here, and then we put in a bunch of red histograms, and then we have a high right here. Then we put in a bunch of red histograms. We break down from the slope line. It flips over red. We attempt to come back up to the slope line, and now we're looking like we're getting rejected. And now here we have a third higher high. So again, 1, 2, 3 drives of bearish divergence. So, a little less discernible on the jewel thief, but we have here a high, we have a slightly lower high here, and then we have a third potential high here, although this is not quite rolled over yet. But again, we're seeing triple bearish divergence, not quite as defined as we see it, like clear cut on the Dow Jones, but here nonetheless, whether you choose to accept it or not is up to you, but the market was telling us what it was planning to do here. So if we do break back down here, initial target 453, that previous high right there, and we'll just, again, stair-stepping our way down. Next, we have the IXIC, NASDAQ Composite Index. So we got our breakout. We hit our measure move, slightly shot above it. We reclaimed that key support line here in blue. We had the support going all the way back to June of 2020. Found support on it every single time. Broke down below it. Came back up, tested it as resistance. We were able to get back above it, but could not maintain it. Now we have broken down from it again. So, again, looking kind of weak right here. Momentum to the downside, looking like an area we could potentially see a bounce, but we would expect a bounce back up to a lower high. Let's look at our weekly now and see what the weekly is telling us. And once again, we see on the weekly a high, a lower high here, and then again, the same high, which is just a different type, but also still divergence nonetheless, because here we put in a high, we put in a higher high, and then we put in a higher high here. And then if we look at the jewel thief, again, we have a high, we have a lower high, we have a potential third lower high. So again, the NASDAQ showing us triple bearish divergence on the weekly. So are we sensing a pattern here? Is it random that we're seeing triple bearish divergence on all these and now we're getting a sell-off? So now let's talk about the old Russell. Spoke specifically about this. I told you this looked like distribution to me, trading inside a range for so long, and that what we would expect to happen is a breakout and then a failure of that breakout. We saw exactly that. We saw a breakout to the upside. That is basically a throw over or a failed breakout. We immediately started to sell back off, could not hold this area as support, crossed the 821 back to the downside, violated the SR flip, the what was resistance we would expect to act as support. It did not do so. This is essentially Wyckoff distribution taking place. We essentially trade inside of a range. We break out of that range to the upside, and then that fails. That is a liquidity, event basically. The market movers push the price to the upside, get people to buy in their stop loss. They have to close their short position and buy. That closes, when they close their short position, they buy, and then also, or their stop loss gets hit, they buy. Also, we get a breakout. People buy into continuation, expecting the measure move to the upside. And then what happens? They buy into continuation. They bought the absolute top like chumps. They are now literally the biggest losers because they have bought all-time highs at the absolute top. And now we are just aggressively selling off to the downside. We hit the exact target of our initial move down, which is the heart line of the channel, the 200 exponential and simple moving average. Immediately flipped the 200 simple over bearish, which is not good. But we obviously saw signs of weakness when the 200 simple crossed above the 200 exponential. So we traded sideways forever. We now have our throw over, which is the opposite of a spring out the bottom. We get a spring, a fake breakout or breakdown, and then continuation to the upside. In this case, we see a fake or failed breakout and then continuation back inside the range. So now what do we expect to happen? Well, potentially more range-bound trading or retest of key levels. So we'll have to wait and see what happens, but momentum is to the downside. Obviously looks very bearish. Very bearish. The fact that we broke out and could not hold that level. And then once again, we see basically a high here. We see the same high here. And then we see a third push up and higher high. It's not quite as defined. But again, we see the high here. We see another push up right here. So we see a much lower high on price action. Same high on price action. Lower high on the indicator oscillator. And now here we see a third and final lower high in comparison to our third higher high on price action. And then again, on the we actually see a different signature on the weekly here. We have a high, then we have a lower high, but we actually took out that lower high here. So technically, we don't have the third drive on the Jewel Thief. But it is very clear to me that this is, in fact, Wyckoff distribution taking place. And we're seeing that lining up perfectly with bearish divergence. We're seeing it lining up with our indicator oscillators as well as our moving averages. So that is the most powerful kind. When everything I use to tell me, what I think is going to happen does exactly that and tells me the same thing is about to happen, the reliability of all those things is exponential. If I just have one indicator or one oscillator or one drive of divergence, it's meaningful, but much less meaningful. When I start to see weekly divergence, triple bearish divergence, and then also like Wyckoff distribution patterns lining up as well, moving averages, momentum, tells me that the likelihood of that playing out is extremely, extremely high. So now here we have the Xle Energy Etf. So we had that inverted head and shoulders. We got the breakout from the neckline. We saw the measure move. We overshot it, found our way all the way back up to the 236 of our macro. And then at that point in time, ran into resistance. We have this key support coming from our previous, the head and the right shoulder. And now we would expect it to come back down and tag that line once again and act as temporary support. Basically gap down, almost made it to the target. We'll have to see what happens. Momentum and everything is pointing to the downside. XLB material sector, again, large gap down here. We spoke about this quite a bit, about how this looked like a breakout to the upside, but we weren't sure if this was going to be sustainable. So now we were basically able to take out the previous high right here, close above it a couple of times, came back down and filled the gap. And now we're seeing a gap down here off of, what was clearly a rejection candle. So what does that tell us? Well, we pushed up again, took out the high, and then it, unsustainable levels. It was almost like a failed breakout or a stop hunt or, a liquidity event. And now here, this is what we were paying attention to was sell by sell. That is our divergence signal. That is our topping signal. I spoke specifically about the sell by sell right here. And that once we left the bullish control zone, we expected violent continuation to the downside. We obviously got it right here. And now here we're seeing the beginning of it forming right here. Multiple red histograms. We are losing momentum, but still above the blue slope line. But the material sector is not looking particularly good either. So now we have XLI, industrial sector, spoke specifically about this, how production in China was not looking good, how things like high oil prices are not good for the industrial sector, and how this was probably, already priced in, but essentially an event based on the quote unquote infrastructure bill getting passed. But now here we see, essentially we've been range bound inside of this channel for some time. We gapped up, found support at the channel, consolidated, and then it looked like we were putting in a double top pattern right here. We also broke down and put in divergence here as well, divergence here as well. We lost the slope line. It flipped over red. We made one final attempt up to push back above that level. And now here we see immediately a massive, massive gap back down. Where do we gap down to? Exactly to the 200 exponential and simple and also the heart line. So, basically the markets are doing what they've been telling us they were going to do. They present themselves in a form of unsustainable price action by showing divergence on daily and weekly time frames. Also, when you take the fundamentals into account and you see production is obviously not at all-time highs right now, it's not strong right now, and we're seeing obviously some clear, canary in the coal mine moments coming from China. We're also seeing very deceitful numbers, but also the way that these numbers are presented. We're seeing comparison of numbers from a year ago. So we're seeing year over year numbers. Well, what was the world like a year ago? Obviously, we would expect things to be much better than they were a year ago. So year over year numbers are not accurate. We're also seeing comparisons by mainstream media and, key analysts in the stock market, crypto, etc. spaces that are basically using manipulated numbers. They're comparing numbers that are adjusted for inflation to numbers that are not adjusted for inflation. They're comparing all types of, false numbers. So they're basically using the numbers to do what statistics do, which is lie. And it's easy to do. So we're seeing that over and over again. So while everybody is sitting here and telling you, no, the economy's fine, everything's fine, GDP's fine, inflation's fine, everything's good, there's no problems, everything's just grand. We're seeing in real life that is obviously not the case. If you go around your city, you go around your town, whatever, you're seeing lots of for sale signs, you're seeing lots of hiring signs, you're seeing all kinds of people, unemployed, unable to get jobs, unwilling to get jobs, all types of different things. You're seeing mandates making people quit their jobs or firing people, laying them off, whatever, because they won't get the jab. So how is the economy going to ever be as healthy as it was before this all happened? How is it ever going to be as strong as it was before this all happened? How are businesses and companies going to be as profitable as they were before this all happened if there's less people working, if they have to pay these people more, if they're not making, as much money and they're on tight margins? If we see massive amounts of businesses closing down, how is our GDP going to grow? We need all these things. We need population growth. We need GDP growth. We need, all these different things to essentially perpetuate the movement up in the stock market and of the system. The stock market is designed to go up because the idea is that we're always going to have more people. We're always going to make more stuff. We're always going to do more things. So we're going to have goods and services increasing. We're going to have population increasing. Therefore, stock market is going to increase because there's always more money going into it. But that's not the case. I mean, we might see that more money going into it, but we're seeing it on lower and lower volumes. And again, we're seeing unsustainable things taking place. So someone can only stand above you and piss in your mouth for so long before you figure out it's rain, or it's not rain, rather. It's piss. And, that's what's happening right now. They're taking the piss out of us, or taking a piss on us, however you want to look at it. But regardless, it's ridiculous, and it's clear to anyone, with two eyes. But if you're watching this, you obviously know there's some weird things going on, and you're interested in them, and you're interested in using those to your favor to make money. The majority of people are asleep. They're sheep. They have no idea what's going on. They don't know what the Federal Reserve is. They don't know what's happening in the stock market. They don't know what's happening in the economy. They don't know about all these topics, all these key things that we discuss. We are so far ahead of the game. Even if you're paying attention just to learn this stuff, the fact that you're here learning it, you're studying it, you're paying attention to it right now, puts you at a massive advantage versus other people. When we had previous recessions, when we had Great Depression, when we had all these different things, there was newspaper articles, and you could talk to your friends or your family or your spouse or whatever, but there was no internet. You couldn't go on, you couldn't find out what's really going on, you couldn't study these things, you couldn't look behind all these closed doors. We are at a massive advantage. So the people that are paying attention now, the people who are taking the time to educate themselves now, are going to reap the rewards of all these things. And as unfortunate as it is that we're going to have to live through these, and there's going to be tough times ahead for sure, but the fact that we're all ahead of the game, paying attention to it, and ready to basically jump on these opportunities is massive. And this is the best time, in my opinion, to just be cool, calm, and collected. This is not the time to FOMO into stocks or cryptos or whatever. If you want to buy the dip on stuff, that's perfectly fine. You can do whatever you want. It's not financial advice. But the fact of the matter is, we're at a potential breaking point. We're at a key level, and we're also coming up on the end of the year where people rebalance. We have tax harvesting events. We have all types of different things telling us, hang on, let's take a step back. Let's de-risk. Let's pay attention. Let's let these markets tell us what they're going to tell us, because we don't know what 2022 is going to look like. We really don't even know what the end of 2021 is going to look like. But we hear everyone saying December is the most bullish month. December is the biggest gains. December is when crypto explodes. December is when the stock market explodes. Historically speaking, December. Well, if historically speaking mattered, which it does, it's a useful data point of information. But if it was a sure thing, everybody would just go all in every December. But that's not the case. Historically speaking, hypothetically, percentage-wise, yes, there's high likelihood, and in previous years we've seen massive amounts of gains in December in cryptos and stocks. We see the Santa Claus rally, Sure, but that does not mean that it has to happen this time. Just like any trade setup, we have to look at the probability of success. So even though that gives us an edge, that typically the last couple months of the year are bullish, typically December is bullish and one of the best months to be invested, we have to also pay attention to the fact that this is not a 100%. Maybe we have an edge on the market because December is typically bullish, but we have to be very, very careful. And we have to look at what the market is actually telling us, not what mainstream media, not what statistics, not what the past is telling us, or at least weight those things. So we see consumer discretionary looking like a very clear double top right here. We have a very clear, double V or M pattern forming. We're at support right now. If we get the breakdown, we would expect the breakdown to essentially be the measure move from the top of the range to the bottom of the range and basically just take us right back down to the breakout level of our little ascending wedge. So, again, we would just take from the wick right here down to our, neckline area. And then if we break through that neckline area, it's going to point us essentially exactly at that same level. So that's what we're paying attention to for consumer discretionary. And then obviously we're seeing sell by sell. I don't like when they're spaced out that much. It's much less reliable, but we are seeing some bearish divergence taking place as well on the daily. So, and now XLP. I heard a lot of numbers about Black Friday. Obviously, this is an international community, but from what I heard about Black Friday, they saw like 50% increase in the amount of shoppers that were out and about, but saw like a 25 to 30% decrease in the amount of, dollars volume that was purchased. So a lot more people showed up and spent a lot less money, but not like proportionally each person spent a little less money. There was way more people, and all those people combined spent less money than the way less people did last year. So we have to be real careful at what some of these real numbers are telling us and how they're manipulating it with year-over-year statistics and whatnot. So XLP next. Consumer staples, again, looking very toppy. We saw, an M pattern double top right here, broke back down to the bottom of our channel in green. We came all the way back up, retested that area once again, and now it's looking like we're getting ready to do the same thing. So we want to see this 71.42 hold. If not, we would expect support at like 69.98. If that doesn't hold, obviously our yellow support at like $68 is key. Again, we're seeing the hard sell, bunch of red histograms. Most of these things are looking very similar at this point in time. And we've been seeing for a long time weakness throughout the broader market, but the index is doing okay. The sector is doing okay because a couple stocks have been carrying the markets higher. That's not the case right now. Now we're seeing like weakness across the board. We're just seeing some things are really weak and other things are just kind of weak. But when we start seeing the big names, the market movers, the safety blue chips, when we start seeing those selling off and putting in 1% and 2% and 3% losses, that's when we're really going to see a strong downturn on this market. Now, does that have to happen? No, we could easily be making new all-time highs in the next few days. But typically, if we see a heavy sell-off on a Friday, even if it is a holiday and a half day and whatnot, typically we see continuation on Monday. So what we're looking for is what's called turnaround Tuesday. So we're looking for what happens on Tuesday. Does Tuesday reverse the trend? If we see continuation to the downside tomorrow, do we see a turnaround on Tuesday and then continuation back to the upside, in which case we can buy into strength and it would look probable that this move is over. But if we don't see that happen, I would expect weakness throughout the week. So I'm really paying attention to price action on Tuesday more than anything because there's a reason we have turnaround Tuesday. It's a thing. But again, it's the same as the December thing. It's likely. It happens a lot. It's statistically probable, but it's not a fact. It's not a guarantee. So XLV is next. So healthcare sector obviously has put in a lower high on this previous drive up here. Looks pretty weak overall. Bunch of red histograms in a row, hard sell signal, but we are still above the blue slope line. So, but it looks like we are about to cross the 821 back to the downside. So my target would be like 126. So next we have XLF, financial sector. So obviously we hit our target perfectly between the 1.5 and 1.618. We then started to show weakness. 821 crossed the downside. We got a gap down exactly to 200 exponential and simple. We just came back down to basically our previous top here, our double top right here, the top. This is a very, very key level. We're at support right now. This thing doesn't look like it wants to go lower. It could definitely go lower. We could actually see it come all the way back down to like that 35 level. But this to me looks like it has already bottomed out at this key resistance. We would expect that to flip as support. And the fact that this is so many tops right here, and then that also happens to be the 200 exponential and simple, I think this is probably done selling off for now. XLK, so tech, obviously much stronger in comparison to most of the other charts we're looking at. Did just put in a new all-time high, but now here we are. See, it's basically at the 21. If this does break down here, we would expect it to break back down to the previous low here, and then also 200 exponential and simple. So I would be expecting somewhere around like that 150 range, which, how can this be possible? How is tech putting in all-time highs when there's so many big tech names that are down 40%, 50%, 75%? Well, that's exactly right. That's exactly right. How is this possible? A bunch of money chasing winners. And what does that have to do with? Well, tax harvesting. So we have these heavy weighted names inside of these, sector ETFs, and also the main indexes. And we're seeing those names carry us to heights. Microsoft, Nvidia, well, bunch of other names. Tesla, lots of other big names. Apple obviously been doing quite well. You could argue a couple of the other tech stocks as well. Google, Facebook, not quite as well, but we're seeing these big, heavy-weighted stocks carry us to these higher values. So when they start showing weakness, that's when the market's really in trouble. XLC, communication, and people are selling off all these like Peloton piece of trash stocks that they were invested in, and then they're just putting more money into the winners, like the Apples and the Microsofts and the Nvidias. XLC communication, again, we're at our target area now. We're at support, essentially at the 200 exponential and simple. We broke down from a key support line. So this was all very much expected. Right now, we got to just see what happens here. We're at a key support area. We're at the 200 exponential and simple. I would expect this to consolidate and attempt to push back up. But we'll see. XLU, utilities. So utilities is really starting to look like it's putting in a head and shoulders pattern. This is sort of a flight to safety. So typically when things are a little uncertain, you would expect utilities to kind of have more money transferred to them, because even if they sell off, you're not going to see the same violence or the same like downside risk that you see with a lot of these others. But this is what it's starting to look like to me. I mean, we have a pretty symmetrical, left shoulder, right shoulder at the same level. Obviously a very clear neckline here. We have a very clear higher high for the head. And now we're showing some weakness. And it just so happens that that neckline lines up with basically the bottom of this long-term channel that we've been operating inside of. So if we get the break of this, what's that going to look like? And again, it's too early to tell. Maybe we don't get this break. Maybe we find support. But if we do, we just take the measure move from the head to the neckline. And that's potentially a break of the neckline, would also be a break of this long-term channel, which would lead to, we have the initial sell-off taking us potentially back down to $56, which is obviously some key support from back here. But then this is the measure move of the entire channel itself. So we could potentially revisit lows back here, and again, does not have to happen. We could easily come back down here, find support, continue to the upside. But we're starting to see signs from many of these things that we're putting in, like micro and macro tops. XLRE, real estate, obviously came all the way back up to the high, retested it, could not get above it, and then had one big candle above it, and then immediately a bearish gap down, and then a big bearish candle that took out, week after week of price action. So what does that mean? Well, we basically had a failed breakout, a false breakout, or a throwover, where we come all the way up, smack all the stop losses down, take out all the shorters, and then boom, can't hold those levels. Come immediately down, looks toppy. It looks toppy for sure. And again, we see bearish divergence taking place between our indicator oscillators. We see weakness in the real estate markets through things like Zillow. We see weakness in actual real estate, seeing lots of for sale signs. Go on Zillow or whatever real estate guide you want to look at, whatever, and look at it. And you're starting to see markdowns after markdowns after markdowns. 5%, 10%, 20%. Days on market for houses going from, 3 days and 4 days during like the euphoric like FOMO, where everybody was just getting 100 offers on their house and it was selling overnight, all cash buyers. Now we're seeing houses been on the markets for, 30 days, 60 days, 90 days, 120 days. We're now seeing them stay on the market longer than they were, previous years. So is the euphoria gone? Well, maybe not. Maybe the prices just have to come down a little. We'll see. Are banks still lending? Sure. But are they lending to everyone? No, they're probably just lending to the people who don't want the money. And again, we're seeing the same thing with like credit card companies, 0% APR, da 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 da. You know, the government has pumped so much liquidity, so much cash into all these markets and given it to so many people. The people who are offered all these great rates and all this money don't need it. The people who are struggling and barely getting by, they're not going to get credit cards, 0 APR, new loans after not paying their rent for months or not working for months or not paying their mortgage for months. So essentially, we're going to see some things start to flush out come January, I think. So XTN is next. Obviously, same thing. We had a key resistance level. We broke out of it. We were unable, again, I told you I didn't like how this candle looked. When we sold off 50% of that candle and left that big wick, we come up, red candle, red candle, red candle, and then we're just melting back down. We're now back inside of that level. So again, it just looks like a failed breakout or a throw over. Bunch of red histograms trending downward. Looks weak. Transportation looks weak. It should stay strong going into the holidays, you would think. With rental cars and, airlines and, FedEx and UPS and all that stuff. But it's not looking like that right now. So we'll have to see how this flushes out. But typically this thing tops in like January, February on the macro. So hail, we had that breakout. It looked like we were going to get this push up here. But what did this have to do? We're talking about the Tesla, the Hertz, the Avis, all this like trash lie BS that Bloomberg's like using to fake articles and pumping this up, etc. And now what happened? We could not take out the key level. This was the key level we were paying attention to. Orange support at 64.50. I told you I did not like how this looked. And while this is overall, a bearish sell-off, the break to the upside, that's fine. Do we get the measure move though? Well, we have to take out this level first. And we did not take that level out. Now here we are right back at the 200 exponential on simple. Momentum to the downside. Looks very weak. Very weak. And none of this is a surprise. All these things are literally just doing what they've been telling us they were going to do. Jets, they just don't tell us the specific day and what the news is going to say. Oh, there's a new strain. Oh, Elon Musk this. Oh, Fed crackdown. Who cares? You don't even have to look at the news. We've been expecting all this to happen for weeks. Some of these things for months. So here we have Jets. Again, very far off of our 2014 all-time highs. This is a trash bag industry that will literally never recover. Oh, airline flights, they're back to normal. They're full. Sure, how many are flying? How many planes are flying? How many flights are going? No, they're not. They're not even close to normal. It just seems busy because, there's more people. Now they have to do vaccine passports. Now they have to check this and check that. And there's all these extra regulations and TSA, and there's less flights and there's more cancellations and et cetera, et cetera. So sure, it seems busy when you go to the airport, but is it as busy? Are things moving as smoothly? No, they're not. They're trash. International flights are barely picking back up, and now here we are, stopping international flights again. You can't come from here. You can't go to there, blah, 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 blah. Sure, how is this airline industry ever going to go back to the same as it was before if you can't travel on an airplane to the place you want to go? So yeah, Jets obviously looking fucking terrible. We had a key green support line right here. We broke down from that support, and now here we are halfway to our measure move. So obviously we Fibonacci'd from the bottom to the top. We were hanging on to the 236 area, came down perfectly to have the 382. Let's see what happens at the 0.5. So 1791, maybe even come back down to the 618, 1607. But let's just keep in mind that this trash bag industry, this garbage industry that has got multiple billion and trillion dollar bailouts, is still down 42.6% from its all-time high. The airline industry is down 42.6% from its all-time high. After getting billions, hundreds of billions, trillions of dollars pumped into it. Sure, why not support zombie industries and companies? It's not like some of these airlines would just go bust and then other airlines would just buy their planes and fly them. No, that's not what free market economies, that's not what capitalism looks like. That would literally never happen because we'll just bail them all out. We'll just bail out all these trash bag companies. We'll pay everybody to stay home and then continue just bleeding money out to them. We'll tack it on the national debt and then everybody can pay for it. And then, it'll just never recover anyway. So bail out for the airplane industry. coming right up. See you in January. UPS obviously came back up, filled our gap, got our beautiful measure move, 20+% to the top, took profits, and now it's rolling over. Again, I would expect this to stay strong through the holidays, but looks like it wants to come back to like 193. Fedex is next. Obviously a trash bag company. The strongest argument for Fedex is that, their outfits are better than the shit brown of UPS, but the actual business, the service, trash nonetheless. We got the initial move up here, 12%, retested 200 exponential, couldn't even get there, and then we're just rolling back over. It's trash. That was our reversion to the mean. Looks like it just wants to come back down. I would expect this to come back down and sweep the lows. Losing momentum, bearish divergence signal, sell by sell, rolling over, garbage. Could go strong through the holidays though. I would like to expect it to, possibly go strong. Let's look at gold really quick. Not going to go into depth with this one, but exactly what I said happened. Literally exactly what I said happened. We came back up here again, another failed breakout above the 200 exponential and simple. And now look, the slope has rolled back over. We're back down here below the 200 exponential and simple. Gave back the entire move. We're bullish. Gold is great. It's going to the moon. It's a breakout. I'm going to buy the top. Oh, God. Yeah. So, inflation fears? Doesn't seem like it. Seems like a giant downtrend that's been going on for months and months and months. And we're probably going to come back down here and revisit the lows. This is exactly what we spoke about. Where did it top out at? Oh, look, exactly at our pink line, which was going by the weekly chart based on all these tops right here. And look at that. We rolled right over, and now here we are, revisiting the bottom again. So, do we just keep filling this out? Sure, we probably do. But realistically, the 200 moving average has been going down inside of the triangle. So we're more than likely going to be getting pushed down towards the bottom of the range. And then maybe we break back up, do that again. How many times are people going to fall for this before we just fall out the bottom and gold goes into a legit downtrend? And then if we look at the weekly, this is when you really start seeing how bad this is looking. We basically did exactly what I said. Crossed the weekly back over, 821, and then we broke down below them now. I would expect them to act as resistance, flip back over red like this, and then eventually get that same move from back here in 2011, where we come back up, attempt it, and then eventually we get that capitulation. So be ready for 5 years and 40% losses, in gold and silver, which is fine if you're not, if you're not trading gold and silver, if you're not buying it as, an investment to make money and get rich. If you're using it as a savings account, who cares? You're not planning on selling it. But, I see a lot of people out there that are like, gold and silver to the moon. Yeah, probably not. Probably not. So we had the potential head and shoulders on silver that obviously failed. Came back up to 200 simple. Got smacked down like the little silverback bitch it is. And then here we go. Back down to the bottom. We've now taken out the right shoulder here. Looks like trash. Is it possible that this still recoups right here? Sure, but now once again, we're at the bottom of the range. And it looks like, come down here enough times, get a false breakout, come down here again, come down here again, come down here again. Eventually we're getting the measure move. So silver going back down to like $17. The more times it does this, the more likely it looks like it's going to $17. So, and it's looking pretty likely. Not going to do all the commodities though. I did just want to touch on gold and silver. Going to go ahead and look at stonks real quick. We'll rip through these bad boys. Most of them look like absolute trash. Tesla looks like it's double topping. We'll see. Looks potentially okay, but we're seeing essentially a rejection off of the blue slope line. Looks like it wants to roll over. Next target is $1,000. Obviously, that's a strong number, round number, but it's also a potential like neckline for like a double top or potential like Adam and Eve type top. So $1,000 looks like that's where Tesla's going. Discovery, we got the move back up. Failed to even get to 200 exponential, and we're right back at the entry. Buy Discovery. Peace out. Looks like it's going to see continuation to the downside. Looks weak. Uber looks like trash, as expected, as predicted, as discussed many, many times. Got the reversion to the mean. Couldn't even get back up to 200 simple. We are in an official bear market, and now here we are revisiting the lows. Now that we've revisited lows, I just expect Uber to break down from this level and go lower. So how low do we go? I mean, let's start with just revisiting the low. After that, just a slow, steady grind. Uber is obviously a cool service, but a trash company. I think Uber Eats probably is what saved them or made them look at least decent. But remember, the Uber pump was on Uber saying, we're going to be profitable soon. That was it. They didn't actually make a profit. They just said, hey guys, one day we're going to make money and it's going to be soon. So if you believe them, great buy. Pinterest, obviously looking like trash, selling off aggressively, left behind these two gaps. We'll see what happens. We see some previous support around this level, but it looks more likely this thing's going to like $35 now. We're seeing once again though, one drive, two drives, potentially going to put in a third drive of bullish divergence and then eventually get a pushback up. But at this point in time, looks like further downside. So we see Snap, obviously, did not work off that initial target. We're down at the second target now. This green support, it's much stronger. We'll see what happens. Is it worth taking another stab at this thing? 40% upside, 4.6% stop loss, 47.57 for the stop on a daily close with a target of 69.84. Almost 8.5 to 1 risk reward ratio. I'm looking at it. We'll see. We'll see how these next couple days flush out, but I will probably take another stab for this gap close. Peloton still looks like absolute trash. Now everybody's going to stay home and use their Pelotons again. Oh, but you can't actually get a Peloton. You can't buy a Peloton. So the people that already have Pelotons that are paying for a service are going to keep paying for a service, and then no one new is going to be able to buy a Peloton. So this little dead cat mini bounce or whatever you want to call that right there, looks big on paper. It's like, oh, 10% move. Look at how far down this thing is. And this got people excited. This was what people were excited about. Let's just look at this really quick. This is what people, Peloton, I'm all in. 15%. It's up 15%. But it's also down 75.5%. So 15% move to the upside after a 75% move to the downside. Holy shit, is this crypto or something right here? Like, they're the only people that get excited when something sells off aggressively for month after month after month and then moves 10% in your favor. You're like, I'm buying the dip, guys. No, you're not, because you don't have any money, because you lost it all, because you can't trade. Idiot. Airbnb, looking like that fatty double top. Slightly lower high right here, but rolling over. 821 cross back to the downside. Barely hanging on to 200 exponential on simple. We'll see what happens right here. Does not look good, though. And again, I expected this initial pop up here to the upside. That trade is done. It is done and over. It is over. I am not going to sit around and wait for this thing to just bleed out. Zillow. I've heard quite a few horror stories that have to do with Airbnb recently too. And I'm not just talking about, I don't know if you listen to Tim Dillon, but he's got some funny Airbnb stories. So Zillow, again, just getting absolutely decimated, absolutely crushed. Almost hit our target here. Didn't quite make it to the entry. I'm looking for like $50. You arguably, sure, take a stab at it now. Hard buy signal coming out of the bearish control zone. With a potential like 70% target to the upside. We'll see what happens. I have not jumped in on this one yet, but I may look at it. We'll see what happens here. Almost down to our entry though. Wish, this thing just rolled over and bled out. Absolutely crushed. We were looking for that gap fill, that push back up, but not looking good. Almost to our 3.618, our next target to the downside, $3.32. We'll see if it gets there. This thing has been putting in bullish divergence, and there's just no buyers on this. Just getting absolutely crushed. Best thing to do is just stay out of the way for now, in my opinion. Bumble is still just a complete meltdown. Everyone that has ever bought this stock is a loser. You are a loser. Like your money. You're losing money. Not like as a person. You're probably a great person, but you're also a loser. Unless you did what we did and just scalped it along the way. But all the people that just bought and held Bumble because women should be in charge and they're going to determine who gets the relationships and online dating is great. Well, you're a loser. You lost all your money. And you're going to be single with a bunch of cats. So have fun. Baidu is next. We're seeing the China meltdown continue. We had this green support line right here. Broke down from it. Retesting it as resistance. Further downside. Looks very, very likely to me. When we start looking at the long term on this thing, let's look at the monthly. What's about to happen on the monthly? 821 cross to the downside. Complete meltdown. This looks like it's about to get a complete meltdown. Alibaba, even worse. Even worse. If ever there was a trash company, this is it. I mean, I actually like Alibaba, but chart-wise. We took out the low right here. We literally gave back everything. And there's nothing below us now but free fall territory. Next support is like 112 or something like that. Keep in mind, this thing was at 317 not that long ago. Down 60% and headed down fast. Bearish control zone. Look at that monthly candle. Look at that big, thick, red monthly candle. Look at these idiots who bought in right here off this green candle. It's pumping. This is it. It's the bottom. I'm going to catch the... Oh, my God. Sorry, bro. Sorry, Chad. Next. TME, 10 cent. Trash music, entertainment. Same thing. We're at support right here in green. We hit it. Tried to bounce, hit it. Try to bounce. Probably going to hit it again. Try to bounce again. And then eventually we're going to fall at the bottom. It's going to go straight from $7 immediately to zero. Diddy about to get delisted. So it looks like we won't have to look at this piece of trash anymore. BZ, the fake breakout, the false breakout, the failed breakout, and now here we are breaking out the bottom. So is this going to be a real breakout? Probably. This looks pretty bad. Pretty bad. So what is it saying about China? What is China doing before the rest of the world? Let's see. Is the rest of the world going to start looking like China soon? Market-wise? Probably. JD.com, we got the exact move off of support all the way back up to slightly above the resistance. This was our bottom that we called out. This was the top that we called out. And now I would expect this to come back down and then eventually roll out and break out the bottom. We do have obviously a high, a lower high, and then again a slightly, same or lower high right here. Same thing here. Triple bearish divergence, and then we break down from the pattern. And if you don't believe me, look at uranium, because it did exactly what we said, which was that exact same thing. And all the other triple bearish divergence all over the place. And if you don't believe in divergence, well, you're an idiot. You're stupid. NEO, looking better than most Chinese stocks, but just literally range bound, consolidating this range. It's got to break in one direction and the other. It really needs to get above $54, which does not look likely, and it really does not want to break down below 33, 37. But we're basically just in the center of the range. There's not really a trade to be had right here. It's coin toss, in my opinion. Remember, this is not financial advice. I'm not your financial advice. These markets are extremely volatile, so please do your own research and trade responsibly. So talk about going sideways. EDU, right back at our entry still after a month. I don't even know at this point. I mean, as long as we don't violate this green support, still looks okay to me. If this thing gets a burst to the upside, we're looking for that 162%, those big, thick gains. But I mean, who even knows at this point in time? It is losing momentum to the downside because the 200 exponential is now back above the 200 simple. But I mean, we'll see. It's a tough one, especially if you were in options, because it's just grinding. TSM, once again, did exactly what we said. We got our initial entry, 8%. The second target hit 15%, topped exactly at the top. And what happened? Continued to trade inside the range. Once an asset trades inside the range, it will continue to trade inside that range until the one time it breaks. When will that be? No one knows. But if we just keep buying the bottom and selling the top, and buying the bottom and selling the top, and buying the bottom and selling the top, we're only going to be wrong once, eventually. And maybe never. Maybe this thing just goes sideways forever, and then it just gets nuked and completely disappears. We'll see. It's not funny, really, but possible. AMD, one of the ones, outperformers, holding up the stock market. Looking pretty weak, though. Back down below the slope line. It is still blue, but looking pretty weak. AMD looking like it might want to let go here soon. Nvidia, same thing. Hit the 3.618 target, almost to the dollar. Hard sell. Seeing some definite weakness. A little bit of short-term bearish divergence. Looks like it wants to let go. I'm looking to pick this back up at lower prices again. Possibly as low as 226. We'll see. Intel, again, just getting absolutely decimated. Still just the trashiest trash of the trash. The worst semiconductor stock you could ever buy. All the boomers are out here talking about Intel is the future. Intel is great. Sure, they've been saying that since 2000 when it put in its all-time high, and it still hasn't put in a new all-time high. So they spent 21 years as losers. You're a 21-year loser. If you put your money in Intel for 21 years and it still didn't put in an all-time high, you literally should just quit your job and go work somewhere else. somewhere else. Please don't work for CNBC and tell people, buy Intel, it's great. Again, if we look at the monthly, 1, 2, 3 drives of triple bearish divergence on the monthly. 1, 2, 3 drives, 1, 2, 3 drives. This is probably the worst stock ever right now. The worst stock ever with the biggest potential to go down other than some bullshit fake meme stock. This is a real company and it really looks like trash. But again, my target, obviously, I told you way up here when we put in the third drive, my target has and still is 35s. When it was in the 60s, I told you see in the 50s. When it was in the 50s, I told you see in the 40s. So now we're in the 40s. I'll see you in the 30s. Intel is trash. When they build their foundry like 3 years from now and they're actually making semiconductors, well, maybe then. And we'll get it at a great price because it'll be like 25, 30 bucks and we'll grab it up all day. And then maybe it will put in a new all-time high. SMH, the semiconductor ETF, again, just what is this really? AMD and Nvidia, that you can just buy them. But same thing, looking weak at the top of the range, looking like it wants to roll over and give back some gains. ARKK, trashy Kathy, playing out perfectly. We're getting the A, we're getting the B, we're getting the C, and it looks like we're headed there soon. So here is our bottom right here. We have our second low right here, and now here we have broken down from that blue support line. So what does that mean? Well, we had the top here at the 0. We had the 236 level right here that was acting as support. We broke down from that support. I expect us to take out the lows at 96, and I will see you at the 382. 87.42. Still have our macro target at the 0.5 at $72. Kathy Wood has lost it. She lost it. She lost billions, and she's still losing billions. She's going to day trade away billions of dollars because she can't admit that she's wrong. ARKF, again, same thing, breaking down from those levels, swooping the lows, revisiting the lows. Anybody that bought this since December of 2020 is a loser. But Kathy's our queen. She's the queen of bucking you. She's strapped one on and she's banging billions of dollars out of you. So, when do you get out? Before or after the next guy? Eventually, y'all going to get tired of getting fucked by Kathy. And that's a fact. Skills. Could go either way. Really looking like it's putting in this inverted head and shoulders. It's tough to buy this now with the weakness in the market and everything, but we are at the entry. We have a 76% potential move to the upside if we carve out this right shoulder here. Obviously the measured move takes us back up to the 200 simple. Could get rejected at 200 exponential. We'll have to wait and see. But with 7.7% stop loss in at 921 and a target of 17.54 roughly, that gives us like a 10-to-1 risk reward ratio. So if we flip a coin and you get it right, you get $1. If I get it right, I get 10. Do I want to play that game with you? Probably. Probably gonna take a chance on that. Teledoc, breaking out the bottom, coming back up, retest our little descending wedge support before this thing just bleeds out. Throat has been slit. Teledoc is headed to $86. This thing has been trash for a long time. I've been talking about lower and lower prices, and it just keeps going lower. But you guys know that $86 has been our target since I believe it was our turn down at $271. So you're going to need to go to a teledoctor and figure out why 66% of your money is gone from this trash bag stock. Palantir, again, back down at support, hit our target here, broke down from key support. This could be the bottom potentially for now, but realistically, I think this thing's going to swoop the lows. Really got to just wait and see what happens here. Bearish control zone, no divergences, breaking a key level of support, back below the 200 exponential and simple, further downside potential. Highly likely. UBX still is a trash bag company, has no earnings, has no product, has no value, is literally nothing. And now here we are swooping the lows again, all-time lows. Literally everyone that ever bought into this, Kathy Wood, and everybody else is literally a loser. Everyone's a loser. Losers, all losers. You lost all your money because you're a loser. I mean, it's only down 91.22%. It's only down 91.22%. It's not that bad. You still have $9 of your $100 left, so I guess that's okay. I mean, still got $9. It's not like you lost it all. Unity Software obviously broke out from the all-time high. Fell just slightly short of the measure move breakout from the channel, but we're back inside the channel right now. Doesn't look particularly great, but one of the few stocks that's putting in all-time highs above the 200 exponential and simple. Seeing some short-term weakness, but honestly, if this level holds right here, the previous high, access support, this thing's going to look okay and probably go higher. I mean, again, this thing, you know, most everything looks like shit. And this actually doesn't look that bad. So let's see if this level holds. If it does, probably goes higher. What's next? Corsair. New lows. Okay, so another one. Another failure. Great products. Obviously, the stock was overpriced. We are now at the 618. My initial target finally made it there. We took a stab earlier. Did not work out. That's fine. Do we take another stab here? Or do we wait until it goes to the 786? I really don't want to see it go to the 786. So if we want to be bullish on this thing, we want to be bullish on it at $23. But it just does not look great. I mean, it really doesn't. It just looks like it's, honestly, it looks like it's just going to break back down again. I mean, we could put a trade set up here, but I mean, what are you going to go off for your stop loss? Just if it breaks lower than the lowest low, below the 618? I mean, this is just it's like a crapshoot in my opinion. 5% stop loss with a 23% target to the upside. I mean, probably just going to be another failed trade. I really just don't think it's worth it. I mean, we can do this 4 times in a row, and if we get it right once, we still end up even or up. But, you know, do we just want to keep taking a stab at something that's continually putting in new lows? No, we really don't. We really don't. Zoom, again, just trash, straight up trash, just getting absolutely crushed. We hit the target to the downside, which was the 0.5 and the bottom of the channel. That's great. Got a little gap up here and then just bled back out, filled the gap. So what's going to happen now? It's probably just going to keep going down. Is it possible with the potential of lockdowns and the new strain and everybody's going to die again and we're scared and now we can't leave our house and we got to go back to online work? Sure, maybe it goes up 36%. I mean, this thing has just been getting murdered for so long, but it's undervalued. Maybe. Or maybe it's fairly valued now and it was overvalued before. I don't know. I mean, it's down 62% from the all-time highs. So, Square, on its way to our target, obviously has flipped over the 200 exponential and simple. Old Jack Dorsey, you know, if he stopped showing his face and talking on social media, I think maybe this stock would do better. But as long as he shows up looking like a homeless man and talking that crazy talk, trying to pump up Bitcoin instead of his actual company that like makes money for him, you know, probably just going to keep selling off. So Square looks terrible. Back down here, revisiting the lows once again. Range bound forever. Wyckoff distribution pattern. Failed breakout from the top of the range. Headed back to the bottom of the range. When it gets there, I'll probably take a scalp move back up. The reversion to the mean, the retest of the 200 exponential and simple. But Square is officially in a bear market, and so are Jack Dorsey's looks. And I don't mean he looks like a bear. I mean his looks are going downhill fast because he looks homeless. But I mean, maybe that's a cool thing is you get like $1 billion and then you just act like you're homeless. But you can't also be famous because then people just know you're lying about being rich. He's like, no, I'm actually broke, man. They're like, don't you own Square? He's like, what? No, it's a different guy. Different guy. PayPal got that big breakdown from support in the process of filling out our measure move. We did hit the initial target at the 382. Could we get a bounce right here? Yeah, we probably do. We probably get a bounce back up to like 204. Remember, everybody was like, 200, that's a steal for PayPal. Well, if you liked it at 200, you should love it at 187 because it's on sale and it might just go lower. It does not look particularly good. No divergence. You know, we did leave a gap behind at 225. So, you know, maybe we get that gap fill. Oh man, I don't know. That last candle rejection just, I mean, we could put in a pretty tight stop loss and basically get almost like a 10 to 1 trade. I'm sorry, 5 to 1 trade right here. Um, yeah, like a 4% stop loss at 180, below 180. I'd rather have it slightly lower, like 179-ish, 4.14, and 20% move back up to that 225 level. That's going to give us a 4.75 to 1 risk reward. It's worth a shot. You know, PayPal is a legitimate company. eBay, it's holding that support for now. We have that green support here. It is holding. Looks okay for now. But we're waiting to get a new entry back down here off like the 200 exponential and simple, or off of this support. I'd really like to get back in around like 66, 67. But I do expect this to go higher. We'll see though. I mean, I think we'll see what these numbers look like coming out of like, you know, the Cyber Monday and all that, and going into the holidays. I imagine eBay is going to do well, but who knows at this point in time. Amazon, again, another just failed breakout, exactly as discussed. Just another failure. Amazon has literally gone sideways now since July of 2020, forever. And how many people bought the breakout and got crushed? Bought the breakout and got crushed? Well, we'll see here soon, but I have a feeling Amazon's headed back to 3202, and then eventually we'll get our target at 2874. But by the time it gets to 2874, who knows what things look like? We might want to get it much lower than that. So, but I am confident that we will be getting it there. Facebook does not look particularly great. We had that inverted head and shoulders potential right here, but just, you know, longer time it spends just on the 200 exponential and simple, more likely it is to break down. We did get back on top of the red slope line, but the hard sell signal coming back in. 200 simple is crossed above. I think this thing pushes back up again, but I think it's going to put in a lower high. Just my opinion. Google McDougal falling down here from our blue line support. Does not look good. A lot of support along the area, like horizontals. But, you know, who knows what's going to happen with this. This thing gets picked up almost every time. Man, it does look weak here. I mean, it's looked weak a couple times, but never sold off like horribly aggressive. I think like 2768 maybe. Gonna watch like this level right here for 2771 for potential buy. After that, we're just gonna look at like that previous low. Not convinced this is like any sort of topping pattern for now, just some temp weakness in my opinion. Microsoft probably looks, yeah, the same thing. Lost that key support level. You know, I would expect the, you know, basically the same thing to happen. Like retest our breakout highs from back here. Maybe fills this gap. You know, we get the entry down here, and then it just keeps on cruising up, keeps on keeping on. Bunch of red histograms, hard sell signal. No surprise here. So yeah, that's it for our traditional stocks. Let's take a quick look at some cryptocurrencies, and then I'm going to cut it off short here again. I think people are liking the shorter little excerpt videos, and then also the shorter streams. So remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Bitcoin futures. So obviously we closed down here at 54,390, and then we actually gapped up with that last minute pump. We still pumped up a little bit, but we are still below the 8 moving average. Really need to get above 58,360. If not, it's just going to look like a retest of the breakdown level, and then I would expect continuation to the 200 simple moving average at 49,095, or the 200 exponential moving average at like 46.4. We are inside the bearish control zone. We're seeing a bunch of red histograms. We have red slope line. This does not look good. Does not look good. Doesn't look terrible, but it doesn't look good. Not what you want to see. A failure to basically do anything once we make all-time highs. The spot market chart looks exactly the same, basically. Looks like we are about to get the hard buy on the daily here. We're seeing a little bit of strength off that bullish divergence that developed on the 4-hour, which is where we got that little pop right before the daily close. We attempt to save the daily and weekly. But again, doesn't look particularly great. Doesn't look terrible, but doesn't look great. I would expect this area to act as resistance, 58,416. And then just looking at the standard stuff, stochastics look decent. RSI looks pretty neutral. MACD is still kind of rolling over back to the upside. It's really just got to get above this key resistance based on the previous like low right here. And then after that, our target's closer to like 61,000 again. But if we break down from here, keep in mind, we're just putting in a series of lower highs and lower lows. So very clearly in a downtrend. So far it looks like a dead cat bounce. Ethereum looks pretty range bound here. Got back above like the 8 and 21, but we essentially have support at like 4,000, and then we have resistance at like 45.25 and 4,400. Just want to see it do something. We are getting the hard buy signal, couple green histograms, and this has been stronger than Bitcoin. Still looks stronger than Bitcoin. ETH Bitcoin ratio made it all the way up to that resistance level. Tried to get a breakout, sold off, and now we're just consolidating. Longer we spend right here, the more likely we are to break out, and Ethereum goes parabolic compared to Bitcoin. But if we get rejected here, I do expect this to come all the way back down to the 0.065 level. Total market cap, again, very bearish here, followed by like essentially like an indecision at the 8. Looks like we're headed down to 21. We're basically at the previous all-time high though, but we tagged the 1.618 fib extension perfectly from the previous all-time high from 2018. Same way we did on Bitcoin from 2017 all-time high or 2018 all-time high to now. Hit the 1.618 perfectly. Bearish divergence very clearly developed here. Hard sell signal leaving the bullish control zone. I'm sorry. Again, bearish divergence here. So we have weekly bearish divergence on crypto market cap. What does that tell us? It tells us your shitcoins can't help you now. Bitcoin dominance. Not telling us a ton right here on the weekly. Back down at those levels. Let's see if this develops into a inverted head and shoulders, and then we get a break to the upside. That's what I think is likely to happen, but there's definitely potential this thing keeps dribbling on down. Shiba Nasty doing nothing, still doing nothing. Potential retest of like a bunch of zeros and then 4.7, but we kind of just already got that, so I don't know. It really just looks like nothing. There's no interest in it. No one cares. Solana. Again, just bleeding out exactly as expected, as discussed. Rejection here off of the stochastics, headed down lower. Took out that previous low. So again, very clear downtrend. Just a series of lower highs and lower lows. That is a downtrend, ladies and gentlemen. But Solana's the future, even though the network crashes. Sure. That's what I'm paying attention to. Got our little channel here. A couple wicks poking out the bottom. That's exactly where we bottom right here. Back on top of the heart line, so it looks okay, but still a downtrend. Avalanche, again, topped out basically right where we discussed. Maybe slightly, jumped slightly higher than 1.618. So, my target was like 115. We made it up to 144. So a nice little move actually above it, but looking pretty toppy right here. Definitely one of the stronger or strongest cryptos, but what does that really say when 90% of cryptos look bad right now and about 10% look good? Bunch of red histograms, hard sell signal. No surprise that was our top. And if you're not using these indicators and oscillators that are provided for free, please check out the notes of the video and you can find out how to get them from TradingView for free. Everything but the TJD Master, which is offered exclusively to group members. And if you'd like to join the group, well, you can hit me up. But yeah, XRP, absolutely terrible. Looks like total trash. It is now officially below the 200 exponential and simple moving average on the daily. People are like, I saw like hype videos for XRP. It has done nothing. It's the worst crypto. It's terrible. It has not even put in a new all-time high, and people are hyping it up. XRP about to go parabolic. Lawsuit coming to an end. XRP won. Well, why is it below the 200 exponential and simple moving average? Does look like it's carving on the bottom here, ready to get a hard buy signal. Last time we saw that signature and the 821 crossed the upside, this thing went absolutely parabolic. We were able to capture that move. Again, just because it's a piece of trash does not mean I won't make money off of it. But this looks very weak. It's broke down below the 200 exponential and simple for like the first time since back here. And even then, the 200 simple never rolled over. Now the 200 simple and 200 exponential are rolled over. This is officially in a daily bear market for the first time this entire 4-year cycle. Link, bear market, again, same exact thing. It kind of touched into one here, but it broke down from that ascending support and looks terrible. It retested the 382 as we discussed. Next target to the downside is a 236 at 1857. Next target to the upside is a retest of 0.5, 2670, potentially as high as 31. Again, bearish control zone, trying to get the hard buy signal and come back up here, but doesn't look particularly good. It's forgotten about. It's like, I'm not even going to say my analogy. Maybe slightly offensive. Let's just say it's the one hitter and quitter of the crypto space. It was fun for a while, but probably not calling Link back, if you know what I mean. Matic, basically have an ascending channel right here, or ascending wedge, depending how you draw it. Had a false little breakdown from that wedge, broke down here officially, and now, it looks like it wants to break back down. We'll see what happens. There's still potential for a nice juicy 42% move to the upside. I'm still good for now, but 9.5% stop loss. We got the stop in at just under 150 on a daily close. We've got the target to the upside at about 235. We've got a roughly 5-to-1 risk reward ratio. Arguably you could tighten that stop up too, and if it takes out the close at like 161, you're not interested. Looks like it could push up here though, honestly, but probably just rolls over and goes to zero. Polkadot bounced the 200 exponential perfectly, still operating inside the channel, at the top of the channel right now. We want to see a breakout of this channel, in which case we could talk about like the measure move to the upside. But obviously, like I said before, it could break out here, but I didn't think it was likely. Well, we revisited the 200 exponential. So again, trying to carve out a bottom. All these things are basically getting ready to cross the stochastics back to the upside. Still very much in the bearish control zone though. Basic attention token was the winner chicken dinner, motherfuckers. Crushed it on this bad boy. Once again, from the entry down here at basically like $1. We got it was basically 100% move to the upside over the weekend. I was talking about this one in the group, obviously. It basically worked out. We hit our target perfectly. I literally said $2, and we came up to $1.93. Yeah, over 100% move in the last couple days. So, obviously had this target in play for a while. We have captured some sweet moves on this, but that was our 1.5 Fibonacci extension. Could still make it up here slightly higher to the 1.618 and hit $2. But if you're like me, you front run those even numbers, take profits, and get out of the way before the big fall comes in. But yeah, we had our basic 5-wave structure. 1, 2, 3, 4. 4 hits the top of the 1. 5, boom, exponential. This was the 1.618. This was the 1.618 Fibonacci extension. So I'm gonna look the other way on basic attention token. Bye. Thank you. Come again. I'll pay attention to it after it carves out a bottom somewhere or consolidates or whatever. But on to the next. On to the next. Uniswap looks like trash. Official bear market, broke down from support, broke down from the 382. Looks like it's coming back down to 1720. If it reclaims the 382, maybe it comes back up to 2386. But probably going to sweep the lows pretty soon here. If it comes down to this 236, it's going to look real bad. Man, talk about a loser. FTT, very clearly descending triangle. Still potential for that pushback up. 21% to the upside, 8% stop loss. But honestly, it could go either way at this point in time. It's a favorable risk reward setup, but it's technically a bearish pattern, so it's more likely to break down, but the risk reward is there. So ADA Cardano. Oh, Charles had a cry fest. He had a cry fest because he got delisted. Oh, poor Charlie. They didn't even warn us. They just delisted us, and I don't even know why, because we're building stuff and things take time, and you just want to buy your Shiba Inus, and they don't even, the working product and Voltaire and wah. I can't wait till Charles legit loses it, because it's coming. This thing looks like trash. Officially in a bear market. 200 exponential and simple have rolled over to the downside. Sorry, Chucky. MicroStrategy should have sold out at $3 like the rest of us. Should have pulled a Charlie Lee. MicroStrategy with the failed breakout coming back down, retesting the bottom of the range. This thing looks like trash. Speaking of trash bag losers, Michael Saylor looking like one as well. Hood looks terrible. Hit the 1.236 fib extension. Probably just going to keep going lower. I see no signs of bottoming on this anytime soon. Coinbase rolling back over, headed to the downside. Put the position in play. I did not take this trade, by the way, but this was, people are asking why I never put up short trade setups. went down from 324, which would have been the entry. It's currently at 303. The downside move was 27%. Stop loss was 6.4%. That is a 4.2% risk reward ratio, and already would be up a whopping 7%. We did it, guys. I'd rather the 100% on that, but that's cool. Game stonk. Could go either way. I really still think it hits this target up here. I think this is a high probability for a short squeeze on like trash bag stocks, but man, would I not want to get stuck holding the bag at $200 on the GameStop. AMC breaking down from that support. We have this blue support right here. Did not want to see it break down from this level. It's holding for now, but I'm telling you, AMC breaks down from this level. I mean, the first couple, it's probably going to stair step down, but like $31. I mean, how long till people quit believing in AMC? I think it's $17. People capitulate full on with AMC and they like start hating it. And then the whole, I saw like Trey had a video out and had a full on meltdown. So who's next? I'm sorry that I didn't tell you guys how much money I make. I want to be honest with you because you're my family, you're my friends. And I did make $660,000 just dry rubbing you, talking about how great AMC is. I did get into it way before you guys did, so I'm still profitable. I mean, I may or may not have sold my AMC. I may or may not have 100% made $660,000 calling you guys apes and just, skiing, just jerking you guys off two at a time, just talking about how great AMC is. But like, look, I just want to be part of the community and like, you're my family, okay? So even though I took all your money and, I made a bunch of money and you guys lost it all because you FOMO'd in at the top, like, I still want you to come to my channel because I still want to make, like, more money off you guys. So, but also AMC does suck. But, hey, I'm hodling. So the breakdowns are coming one after another and they're only getting more entertaining. I'm probably going to just do, like, a compilation of, like, breakdown videos for, like, people like Trey and Charles, and I'm sure we'll get a Michael Saylor breakdown video, like all these people, because it'll just be hilarious. I think a compilation of them, and I can just display like their stock charts while we do it. Newegg got that push back up. This thing's trying to go hard in the taint right here. It technically closed back above support, and I did say if it closed back above support, this thing could start looking juicy again. I don't think it's going to. It is a decent little rejection wick right here. But I mean, look, if it starts consolidating here, am I going to take a stab at this thing for like, a retest up to these key levels? I might. God, do we really have to potentially trade Newegg again? Is this really a thing? I mean, next target to upside 382, maybe the 0.5 after that. I mean, I try not to get greedy on these things, especially after we've already done like some nice moves. But I mean, what, $30? That's another 50% move to the upside. If we hit the 0.5, maybe we get to the 618, $40, 100% move to the upside. All right. Might have to jump on that bad boy. Let's see how it closes here and opens here. And if it starts to like consolidate above this level, and I will potentially get back in. Because this thing really could get nasty in a good way. Let's see what the trade setup would look like. Man, a 15% stop loss for a 55% move to the upside. I mean, it's borderline. I mean, it's worth it. It's a 4-to-1 risk reward ratio almost, but that's a juicy stop. So it'd have to be a smaller than typical position. I don't really like giving up 15% on something that I've already crushed it on. You know what I'm saying? I don't like to give anything back. I like to take from them everything and give them nothing. Bed Bath & Beyond, just consolidate. This thing just looks like it's ready to bleed out. If it puts in a higher low, though, maybe it does go up and pulls a bat on us. DraftKings, oh, man. Oh, man, it's bleeding out. Oh, Kathy. Took out the low. Maybe it consolidates here and pushes back up. We're basically at our first target, 1.382/1.5. I mean, I really want to see this at like $29. Am I even interested in it then? I don't know. It's a real company. I'm a real boy. But yeah, that's it for our crypto today. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Hopefully you guys enjoyed the video. I'm going to go ahead and call it there. I appreciate everybody that showed up. Appreciate everybody that watches this later. I will, of course, do some snippets later on. Hopefully you enjoyed my goofy mood today. Thank you all for supporting the channel. I have noticed many more likes and new subscribers as well. So make sure you share these videos with your friends, your family, your dog, but not your cat, man. Nobody likes cats. Unless they're like big, aggressive cats like bobcats or lions or tigers. They're cool. But like little house cats, nah, they suck. They just shit in a box and don't like you, even though you're their owner and you feed them. But yeah, that's it for today. Hopefully you guys enjoyed the stream today. It is Sunday, 11/28/2021, coming up on the weekly open and monthly closes here, coming up on December, the most bullish month. So let's see if we get that bullishness or if it just rolls over and dies. Looking forward to this week. Tons of excitement. Obviously crushed it on the basic attention trade. This has been, we've been destroying these markets lately. Complete domination. The markets are literally our bitch. So hopefully they just, keep being subservient little bitch, and we can keep capitalizing on all the free money that they are giving us. But until then, I'm out of here. Crypto Channel Trader with our Sunday evening market look ahead. It is 9:27 on Sunday Eastern Standard Time, and I'm out of here.